Welcome to Talk Tickers. The London Stock Exchange Group just dropped a trading update that sent a massive signal to the market. We're going to decode what happened, why it matters, and what their next move could be. Let's get right into it.
And that signal was loud and clear. The stock absolutely rocketed, jumping nearly 9% on the day of the announcement. Now, a move that big, that powerful, that's not just about a solid quarter. It tells you the entire story. The whole narrative is shifting. The market heard something new, and it clearly liked it.
So that's the big question, right? What exactly powered this rally? Was it just a simple beat on the numbers? Or was there something deeper, a more strategic story that really grabbed investors' attention? We're going to unpack the two key pillars that drove this whole re-rating.
So here's how we'll break it all down for you. First, we'll hit the headline numbers that set the stage. Then we're diving into the two main strategic stories: their big defense against AI and a really smart move in their post-trade business. And of course, we'll wrap it all up with our take, a rating, and a potential trade idea.
Okay, let's start with the financials. And look, while the numbers themselves were solid, they were really just the opening act for the bigger announcements that followed.
So this was a very healthy quarter. You're looking at total income growing 6.4% organically, which is great. And you see some real pockets of strength, like Risk Intelligence, up almost 14%. Their key subscription number, annual subscription value, or ASV, grew 5.6%, which was just a touch ahead of what people were expecting. So all in all, solid numbers, but probably not enough to justify that 9% stock pop all by themselves.
And this right here is where it gets really interesting. See, management didn't just deliver a good quarter. They confidently raised the bar for the future, and that signals some serious execution and control over the business. First, they bumped up their full-year EBITDA margin guidance by 100 basis points. For a business of this sheer scale, that is a significant step up in profitability. It shows real operating leverage is kicking in.
Second, they confirmed equity-free cash flow of at least £2.4 billion. And the key thing here is that this isn't just some number on a spreadsheet. This is a true cash-generating machine we're talking about.
And what are they doing with all that cash? Well, they immediately announced another £1 billion share buyback. So you've got this trio: raised margins, strong cash flow, and capital return. That is exactly the recipe the market wanted to see.
Okay, let's move to the first major strategic pillar that really got everyone's attention: their answer to the AI question. For months, the big debate has been whether AI and large language models could just come in and replicate LSEG's data business. Well, management came out swinging with a very, very detailed defense.
And this quote from the CEO, David Schwimmer, just perfectly captures their position. The message was incredibly direct. Their most valuable data isn't stuff you can just scrape off the public internet. It's deeply, deeply embedded within the financial plumbing of the world.
Now, what's so interesting about this slide is how they broke it down. For the first time ever, they showed that a whopping 90% of their data revenue comes from sources that a large language model simply can't access or replicate. We're talking about things like real-time market feeds, proprietary pricing, exclusive news. Only 10% comes from publicly available data. That's a huge point.
They frame this whole defense around three moats. First, the data itself is often proprietary or exclusive. Can't get it anywhere else. Second, they enrich it with their own intellectual property. And third, their curation, cleaning it, validating it, tagging it, creates a standard that the entire industry relies on. The message couldn't be clearer. This is not a commodity business.
So, the second big story was a really financially savvy move in their post-trade business. This wasn't about AI at all. This was about smart capital allocation to structurally improve the economics of one of their crown jewels, a business called SwapClear.
So here's the deal. Historically, LSEG had to pay out 30% of SwapClear's revenue to its partner banks. They just spent over £1 billion to buy down that revenue share, cutting it in half to 15% next year, and then all the way down to just 10% from 2026 onwards. This is a move that permanently increases their take rate on a massive growing business. Just a smart deal.
And the immediate impact? Well, this deal is expected to add 2 to 3% to earnings per share starting next year. So think about it. They've defended their data moat and locked in higher profits from their post-trade business. They've created clear, quantifiable value that investors could immediately plug into their models.
So, let's put it all together. You've got strong execution, a credible AI defense, and a smart, value-adding deal. So what's our take from here?
We are initiating with an outperform rating.
The company just demonstrated a powerful combination of operational momentum and strategic clarity that we think absolutely justifies a higher valuation.
Our thesis here really rests on 4 key pillars. First, management has totally reestablished its credibility on execution. They're doing what they say they'll do. Second, that data moat strategy looks durable against the AI threat. Third, they're making really smart value-add moves with their capital. And finally, you've got near-term catalysts on the horizon, like their upcoming innovation forum. And that brings us to our trade idea. The next big event to watch is their innovation forum on November 10th. Now, management has set expectations that this is about product, not new financial targets. But after they so successfully reframed their AI narrative, any impressive demos of new AI-embedded products could absolutely act as the next major catalyst. We'd look for increased volatility and potential upside heading into and out of that event.
So that's our take on LSEG's breakout quarter. As always, this is not financial advice.